If you're collecting Social Security or planning to claim benefits soon, listen up. Four major changes happened in 2025 that could either cost you thousands of dollars or save you money on taxes. And one of these changes affects when you can get your full benefits. Meaning if you were born in 1959, your retirement timeline just shifted. I'm going to break down all four changes in the next few minutes. And by the end, you'll know exactly how to protect your retirement income. Stick around because change number 2 could put extra money back in your pocket starting right now. Social Security has been providing financial security to Americans since 1940, but keeping up with the changes can feel overwhelming. The good news? You don't need to understand every detail, just the ones that directly impact your benefits and your wallet. Today, we're focusing on the 4 most important changes for 2025 that every current and future retiree needs to understand. Change number 1, full retirement age increase. Let's start with the biggest change, and this one's permanent. If you were born in 1959, your full retirement age just increased by 2 months to 66 years and 10 months. Now, why does this matter to you? Here's the math that could cost you thousands. Your full retirement age, or FRA, is when you get your complete benefit amount, what Social Security calls your primary insurance amount. Claim before that age, and your benefits get reduced permanently. Claim after, and they increase. If your new full retirement age is 66 and 10 months, but you claim at 62 like many people do, your monthly benefit gets slashed by about 29%. That's nearly a third of your money gone forever. On the flip side, if you delay until age 70, you get an 8% boost for every year you wait past your full retirement age. Let's say your full benefit would be $2,000 a month. Claim at 62, and you're looking at about $1,417 instead. Wait until 70, and that same benefit jumps to about $2,640. That's a difference of over $1,200 every single month for the rest of your life. Change number 2, tax deduction for seniors. Now here's the good news I promised. Change number 2 could put money back in your pocket. Next, a new tax break is available for people age 65 and older. Between now and the year 2028, you may be able to deduct part of your Social Security income when filing your taxes. You can deduct up to $6,000 if you're single, or $12,000 if you're married and filing jointly. But there's an income limit. This depends on something called your Modified Adjusted Gross Income, or MAGI. MAGI is just a fancy term for your taxable income after certain allowed deductions. Here's how it works. You get the full deduction if your taxable income is under $75,000 for single person or $150,000 for married couple. You get a partial deduction if your taxable income is between those amounts and $150,000 to $250,000. If you make more than that, you don't qualify. Example, Jane is 67 and has a taxable income of $70,000. She also gets $15,000 in Social Security benefits. With this new deduction, she can subtract $6,000 from that, so only $9,000 is taxed. That could save her hundreds of dollars in taxes. Change number 3, higher payroll tax limit. Payroll tax means the money taken from your paychecks to fund Social Security. People who are still working will pay Social Security taxes on a bit more of their income in 2025. Let me explain. Every worker pays 6.2% of their wages into Social Security. Employers also pay 6.2%, making the total 12.4%. But this tax only applies to a limited amount of your income. That's called the wage-based limit. In 2024, that limit was $168,600. In 2025, it's going up to $176,100. Example, Mark earns $180,000 in 2025. He pays Social Security tax on the first $176,100. The remaining $3,900 is not taxed for Social Security purposes. So higher earners may see more tax taken from their paychecks, but only up to that new limit. But there's a silver lining. Paying more into the system now could mean higher benefits when you eventually retire, since your benefits are calculated based on your highest 35 years of earnings. Change number 4, higher earnings limits. The last change is for people who start getting Social Security before they reach their full retirement age and are still working. This is where the retirement earnings test comes in. It puts a temporary limit on how much you can earn while still getting benefits. If you earn too much, Social Security temporarily holds back some of your checks. There are 2 limits. 1. If you are below your full retirement age the entire year, you can earn up to $23,400 in 2025. If you earn more than that, they take $1 out of every $2 you earn over the limit. 2. If you reach your full retirement age in 2025, then your limit is higher, $62,160. If you earn more than that before your birthday, they withhold $1 for every $3 over the limit. But here's the key. These withheld dollars are not lost. Once you reach your full retirement age, they recalculate your future payments and slowly pay you back over time. Example, let's say Susan is 64 and starts receiving benefits. She also earns $30,000 from a part-time job. The limit is $23,400, so she is $6,600 over. Social Security withholds $3,300. That's $1 for every $2 over. After she reaches her full retirement age, her monthly checks go up a bit to pay that money back. Here's the key thing to remember. If your benefits get reduced because you earn too much, you don't lose that money forever. When you reach your full retirement age, Social Security recalculates your benefits to gradually give you credit for those withheld amounts over your lifetime. So, there you have it. 4 Social Security changes for 2025 that could significantly impact your retirement finances. If you found this helpful, make sure to subscribe and hit that notification bell so you don't miss future updates about Social Security and retirement planning. And if you have questions about how these changes affect your specific situation, drop a comment below.